Um, I will jump the introduction, so go directly into who owns Bitcoin here. Does anybody own Bitcoin? So I heard about Bitcoin a really long time ago when I was working with Andrew at a really nice company. And I was like, what is this? And I couldn't really understand, and was really like weird and complex. And I really wanted to get into it because it was like, okay, it's digital currency. It's really interesting. Basically, if you don't know, blockchain is the database that runs, is one kind of database, and Bitcoin was the one that introduced it. And the blockchain is the database that runs behind Bitcoin. And what it actually is, it's a distributed ledger, it's a distributed database where every node, the so-called miners, they keep mining transactions, almost like mining gold. Maybe I'm explaining it badly, but it comes down to there's a bunch of people with a copy of the database on their computer, and they are fighting to do the next insert on the database, right? So there's a bunch of people and with a whole copy of the database, which means everybody knows what is there and it's public available, contrary to the bank ledgers, for instance. And once they get the right to do the next insert on the database, they're going to be able to go there and insert the next bit of data, which is called a block. And this block is attached to the previous block. That's why it's called blockchain. And it's almost like Git, but it's not Git. It's a much more crazy version of Git, because people are building currency and they're building a lot of really complicated stuff inside of it. And one example, for instance, is Ethereum, which is basically building a blockchain where you can build whatever you want into the blockchain. You could basically write Bitcoin inside of Ethereum and have your own Bitcoin running on Ethereum, which is another blockchain. It gets really complicated, but what it really means in the end is if you had, for instance, a voting system, let's say the ballots, and everybody would vote on the blockchain, by the time the election finishes, everybody would be able to audit their own vote straight away. So by the end of the election day, everybody would go onto the blockchain and would say, yes, my vote actually counted for the right politician, which is something that we don't have today. And in massive countries like United States, you would have to pay a lot of money to recount the votes, which is absolutely nuts, because they can go to Mars and to the moon, but they cannot like count the votes for free in real time, which is a funny thing I find. And blockchain basically brings a solution for this. You would be able to audit a lot of data, and more importantly, you could also do peer-to-peer transactions without middlemen. So if you want to send money to your girlfriend in China, you just send some money to her, and she can open a blockchain, she can open a wallet on the blockchain, pretty much like anybody can open an email. And which is also amazing, because if you try to open a bank account now, you would have to prove who you are and tell where you live and how much money you earn. So basically, banking is not for everyone, and the blockchain is. It's a global market, it's a global database, and everybody can open their account. So imagine how many people doesn't have an account today and don't have access to the banking system. Boom, that's sorted. You go to a website, or if you're a nerd, you download a command line tool and you open your account, and straight away you can make peer-to-peer transactions without a middleman. So it goes without saying that's one of our biggest weapons against corruption and nasty banks and things like this, and everybody should get into it and tell your mom about it, and your sister and your brother and everybody. So, sorry, that was a bit of my religion talk. So basically, I got some Bitcoins and got really passionate about Ethereum, and the markets were going really high, and I was buying Bitcoins and I was earning a lot of money with them. And I was really happy about it, because the market was running 24 hours, 7 days a week. I didn't have to look for a job. I didn't have to answer emails. I didn't have to answer my phone. I just was making money without any clients. My client was sitting down at the computer and trading the markets, which is an amazing feeling of freedom. Like, you're not jobless anymore if you can make money on this. Of course, it's not easy at all. But you can get really deluded and eluded and lose a lot of money as well. It's really risky. But there is some logic to it. And basically, when I started, I was just basically starting at a chart like this, and I would be like going to Reddit, like Reddit, F-Trader, for instance, Ethereum Trader, and I would be reading news, and I would be like, oh wow, it seems like Ethereum is going to go up, so I'm going to just buy some Ethereum, and then it will go up, and you buy. But the thing is, once you buy, it's not like, oh, you're making money straight away. You have to like sit down in your chair and watch the chart. And if the chart is going down and you bought it, you're losing money. And you have no option other than sitting down and waiting or giving up on your trade, which it's really hard on your feelings and in your head and can mess up you pretty much. So when I started, let's say, I would buy something like, here is, does anybody know how to read charts? So it's like this. Basically, you see all these green and red rectangles. They basically mean the variation of the price of a currency against other currency. So here is the price of Ethereum measured in Bitcoins, right? So let's say when you say the euro is going up, like say, oh, the pound is going down. What does that actually mean? Probably means the value of pounds compared to dollar is going down, but maybe against something else, it's going up. So when you're putting a price on something, you're generally putting a price against another currency, right? So here I'm Poloniex, which is like an exchange where you can go, you put your Bitcoins, and you can trade it for a lot of other crazy currencies. And a lot of people doesn't know, but it's not only Bitcoin that exists. There is actually hundreds of coins that exist, maybe thousands by now. And each of them, like you can see, you have Bitcoin, you have Ethereum, you have Ripple, NEM, Litecoin, Ethereum Classic, Dash, Monero, and they all have their own blockchains. They all have the implementation. Some of them are a fork of Bitcoin, some of them are not forks of Bitcoin, and it gets really crazy. But some of them are really amazing and life-changing things, like Ethereum, for instance. Like, once you understand Ethereum, like, oh my God, I can write some code on my money and then put my money somewhere, and then my money can take decisions without me. It's like, oh my God, like, you can't do this on real money, right? With Ethereum, you can literally write code and put your money inside of the code, deploy your money to the blockchain, and your money can do stuff without you. And it's like the money of the future, like, no doubt. That's like how we're gonna live in the future, maybe in 10 years, maybe in 20 years, but that's the new money. And that's something really interesting to be involved with, and a really amazing time to be alive, because this is proper nuts. And so let's come back to the graph. So basically what this means here, you have like periods of 5 minutes or 15 minutes or 30 minutes or 2 hours or 4 hours, or 1 day. So let's say I choose to see periods of 4 hours, and I want to see the last month of data, right? So basically here, for every rectangle, it means 4 hours of transactions on this exchange, right? So I'll change to 1 day so you get a better resolution. So here is the last month of trades on Ethereum. When you see a green rectangle, that actually means the price went up. And when you see a red rectangle, it means the price went down. You have this thing here called the body. Like, each of those rectangles and black lines are called candlesticks. Each candlestick have an open price, a closed price, the highest price, and the lowest price. And what that means is, for instance, here, let's say I'm looking at the 1 day chart. So if you get this day here, you see that here down the bottom of the green, you see the price here on the right, like 51.04, something like this. Can you see? Yeah, like right where my mouse is. So at the bottom of the green, is where the price opened on that day. At the top of the green is where the price closed at that day. You can see that generally the next candle starts right on the place where the previous day closed, right? The black line, which is called a shadow, shows, is it still working? Yeah. The black line shows all the fluctuation of the price. So even though the price opened at the bottom, the price actually went a bit down where this black line is, and it actually went a bit up as well, higher than the close price. But at the end, it ultimately closed at the end of this green rectangle. So if you get a red one, for instance, this one, it opens here. So they open here. So here, the price of this day, which is 8th of May, open at 0.5850, and it closed at 52.56. If you get the next day, you see that's a different, it's a totally different one. You see that the shadow, which is the black line, it's much taller than the actual body of the candle. And that what it actually means here is that the price opened here, and it went all the way up, and it went all the way down, and then ultimately it closed here. So this day, there was a big variation during the day. The price went all over the place, and then closed here. If you get this day, you can see the price went up and down, but actually closed very, very close to where it actually opened. And there is, that's the very, 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 very basics, right? So ultimately, how would you, the first thing I must say is like, having Bitcoin and Ethereum is not about making money with trading. I think just trading is a really interesting subject, but you're pretty safe if you just buy Bitcoins and Ethereum. Well, don't quote me on this, but theoretically, theoretically in the future, it has to grow up for reasons that I can get into details later, like how the bank steals your money while you're here, for instance, which doesn't happen with Bitcoin. So let's say there's two ways of making money in such a market, right? One way is what everybody knows about investment, which is you would buy when the price is low, for instance here, and when the price goes high, like here, like a couple weeks later, you would sell it at a higher price. So let's say today it's 11th of March, and you bought 1 Bitcoin worth of Ethereum, and then Ethereum goes up, 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 and then what happens? The price of Ethereum now is much higher, and now that amount of Ethereum that you bought, which was like maybe 1,000 Ethereums or something, was worth 1 Bitcoin, but now it's worth 2. So now you could sell, and bang, you make 1 Bitcoin of profit, which translates now to 1 Bitcoin is today, thanks God, $2,470. For those who don't know, it more than doubled the price this year, and compared to last year, it's about 4 times the price. Like last year, I remember some Bitcoins going for $600. So you can imagine like how cool it is to have your money in here, right? Like there is no investment anywhere else that will give you this return. And there is no other investment that's closer to coders and technology people than blockchain investments. Like if you want to invest in euro and blah, 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 you have to understand how Europe is going, how, well, like you have to hear Theresa May and like, oh my God, you don't want to do this, right? What you really want to do is listen about technology and see how people are innovating financial markets, how people are making the money of the future, and how people like us will be able to destroy a lot of bad things that happen in society, like corruption and fake ballots, right? So going back to the chart, there is another way of making money, which most people doesn't know, and it's actually pretty crazy when you understand how this works, which is you can sell. This happens on any investment. This is pretty standard, right? You can sell something when it's high. So let's say you would come here and you don't have any Ethereums whatsoever, right? You have just one Bitcoin on your account. And you're going to come here and you're going to sell at 56. Basically, you sold something you don't have, which people that invest knows is called a short in the market. And when the price goes down, you buy it back. So basically what happens here is when the price goes up to 0.56, you sell 1,000 Ethereums, for instance, which you don't have, and you're going to do this because the system automatically lends you. So you're basically renting some Ethereum from somebody, selling this Ethereum that you rented from somebody at a higher price. When the price goes down, you buy cheaper and pay the rent back to the person that rented you the Ethereum, which is absolutely nuts. But it's a standard, and the banks are doing this, the government are doing this. A lot of people are doing this and profiting from other people losing money. And that's very standard. So this is called short in the market. So let's say you sell here, you buy back here, you pay back your loan, and yeah, you made some money out of the market going down. So for instance, when there was a big crisis in the US and the house market crashed and everything, there was loads of banks actually shorting the market and making money out of the crash. So people are struggling, they don't have any money, the crisis come and they like have even less money, but make sure there are banks profiting on this, which is really not nice to know. So, okay, so at the beginning I started by buying it here and selling it there, and then I would spend like loads of hours. I'll get to the coding part, I swear. I would buy it here, and it would go high and high and high, and I would sell here. But what would happen was I was getting really nervous, and the market is 24 hours and 7 days a week, and it was really, really hard to keep up with your life when you're losing money, right? When you're earning money, you wake up, you're happy, everything's nice, the sun is shining, you like eating burgers in Shoreditch. But when you're losing money, it's definitely not a cool thing to have in the back of your mind while you're doing other things. Like you're hanging out with your buddies and you get your phone and like, oh nice, I'm losing money. It's like, it's not cool. So, and there was also like opportunities that I lost because I was sleeping, right? So I was like, you know what, I know how to code, so maybe code can help me a little bit. And I was like, okay, so how can I deal with this using code? The first thing that came to my mind was like, yeah, I'm gonna use a node.js and I'm gonna build something cool. So I had to go into technical analysis and understand how technical analysis work. And also I had to understand how this chart translates into code. Because now you look at this and you're like, okay, great, I want to code on this. So how does this translate to code? It's like, what is this chart in code? Even though it's quite obvious when you know, after you learn, it doesn't really make sense before, at least for me. So basically, what I learned is that this crazy chart here, it actually just translates to one thing that everybody knows here how to deal with, which is an array of objects, which is like how God made the planet and stuff. So basically, I will run an example here. So yeah, I use CoffeeScript, okay? So I will go here and I'll get some codes. And what I will do is I'm not making music now. I'm gonna go to the Poloniex, which is the exchange where you can buy Ethereum and Bitcoin and stuff. And I'll go to the API and I'm gonna check how to get the data. And there is actually like, you see there is like there'll be a return chart data method. So return chart data, yeah. So this return chart data method on the API will basically give you the options that you have on the UI. You can say, give me candles of 4 hours and give me the last 1 week of candles, right? So if we go to my, if I go back to my VI, so if we go here, what I'm doing is I'm using this PLNX, which is a library made by a guy that abstracts the requests you have to do to the API. I'm using moments to calculate dates. 4 minutes, yeah, cool. So I'm gonna go fast. So poloniex, get moment, I get Slowdash, I get my payloads here where I say I wanna get BTC against Ethereum, and that's the period, that's the start date, that's the end date, and gonna call this, and it will give me all the charts data of the last 20 days. So I'm gonna just put a return here. So basically, if you guys didn't see, that was my payload. I get my start date, my end date, the currency pair I want, the period I want. This is period in minutes, so this means 4 hours. The start date, which is say 20 days ago. I get the Unix timestamp, start and end, return chart data, and then here I'm gonna trace the last 20 days of 4 hours candles. So basically, this gives me an array of objects. Get the date, the high value, the low value, the open, the close, etc. And then I can then do really smart things with it, which I'll not go super crazy now, but because I'm running low on time. But basically, one way of doing technical analysis here to know if the price is going up or going down, what you would do is you would get, for instance, one thing that's called a simple moving average, which translates to basically a for loop that just gets the price and put it all together. So let's say if I'm going to do a simple average of the price of the last, let's say, 40 prices, you get the last 40 prices, do a for loop, you get those 40 prices, divide the total by 40, and you're going to get a line like this. And basically, this blue line here now is the average price of the last 40 candles. So at every candle that shows up, it will get the last 40 candles, put the close price of them together, divide by 40, and plot this line. Sounds complicated, but it's not complicated. It's just a really simple for loop. And what this basically means is that you get an average price over time. And if you look, coincidentally, if the price is going up, it has to cross the line up. There is no other way the price is going to go up if the price doesn't cross the line up. And if the price is going down, it's going to have to cross the line down. It's just how average works, right? You have an average of the last 40 days, and then the price eventually goes down the line of the last 40 days. You know the price is going down. And I'm not saying this strategy is profitable, but that's definitely the first strategy you need to learn. So basically what you can do is you get this average here, which can be easily calculated with a library like Talib, which is technical analysis library for Node.js, but honestly, it's just a for loop. And basically, this Talib will give you this line. You don't even have to do the for loop yourself. And basically, you can do things like on every 4-hour candle, you can check, is the current candle price below the average price? Yes. Was the current candle price over the average price? Yes, it was. So great, the price just crossed the average line. You know the trend is changing. And now you have a good idea of points to sell the stock, or to sell Ethereum, or to sell Bitcoin, or whatever. So that's a really, really simple strategy. So just to finish, because I could talk about this forever, I'm gonna just show, like, which is really interesting, and that's something that wasn't really available. Like, if you go tomorrow and you call like a broker and say, hey, I want to use Node.js to sell and buy euros, can I do it? They're gonna like first ask, what is Node.js? The second thing, they're gonna laugh at you. They're gonna ask your address. They're gonna ask you to put that amount of money there. It's nuts. Like, if you open an email one day and you try to open an account there, you're like, man, this doesn't work. So I will show here how simple it is to actually.
You gotta cut it.
Okay, sorry. I'll just run one node script and that's it. I'm gonna just long Ethereum here. I just run my coffee, and that's hopefully there is no. Yeah, that's it. It placed my order. I basically said I wanna buy Ethereum at this price, that amount of Ether, and yeah. My Node.js just bought it. I didn't have to open the website. I didn't have to do anything. And then if I'm smart, I can make the script better and make money. That's it.